Hi, everyone. My name is Shay Rowell of the Rowell Realty Group at Keller Williams Vestavia. And today, of course, I'm speaking with my favorite guy, Andy Gagliano. How are you, Andy?
Good morning, Shay. I am well. How are you?
I'm doing well.
Good. How was
Do
your fourth?
Oh, it was really good. It was
Awesome.
really good. We
Yeah.
rode ATVs and sat by the pool, and it was really nice. How about yours?
Pretty much the same. It was very nice. Hung out with friends and family and hung out by the pool, ate way more than I needed to eat. And
Did you stay here? Were you in town?
yes, yeah.
Okay.
So I was in Birmingham and I don't know, I'm not much of a traveler on the 4th of July because everyone else is.
Mm-hmm.
And if I
All that.
travel somewhere, I like to go and relax.
Yeah.
Having to fight crowds is not very relaxing for me. So, but yeah, we had a good time. It was a nice day.
Okay. Well, good. It's good to see you back.
Yeah, it's good to see you too.
All
What do you
right. So
have for us today?
today I'd like to educate on loan types.
Okay.
How you feel about that?
I feel like I can probably talk enough about that to maybe confuse everybody, but
Oh.
no, we're not going to do that. So why don't we do this? Because, there is a lot, that is a huge topic.
Mm-hmm.
But I think if maybe today we just kind of do like a 30,000 foot overview on each of the loan types.
Exactly.
And then maybe we can dig deeper into each one and really get in the weeds and talk about who they're really for and that kind of thing.
Right. Sounds good.
Okay. Well, then, cool.
Well,
So,
let's start with the famous FHA.
all right. FHA is a loan program that is actually there's several loan programs under the umbrella of FHA. So FHA has their just general home buyer program
Hmm.
that's much like any other loan. Obviously, there's different qualifications and that kind of thing, but those are all those loans are all under the umbrella of the Department of Housing and Urban Development, or HUD. So we have HUD, who has, I guess, an division of HUD for FHA, and that's the Federal Housing Administration. And FHA was formed. Oh, you know what? I believe they just celebrated their 60th anniversary last week.
Oh, okay.
I think that's right. Six,
Okay.
yeah, 60 years. So FHA was originally put into place to help out buyers who, back in those days in the 60s, uh, most buyers had to put down a 20% down payment to buy.
Hmm.
And that was very difficult for people to be able to come up with that kind of money. If you think about it today, it would be catastrophic for our economy for people to have to put down a 20% down payment, because you're talking at an average sales price of what, 400,000, just ballpark. So
Hmm.
20% would be $80,000 that somebody'd have to come up with for a down payment. So FHA, if we rewind 60 years and go back, home prices were much cheaper then, but so everyone's pay level was much less then as well. So FHA came out and they said, hey, look, instead of requiring buyers to put down 20%, like what was required, was being the key word, what was required as the average down payment for conventional loans back in those days, FHA said, let's come up with a low down payment program, make it available to everyone, first time buyers, repeat buyers, whoever else, but people who just don't have a lot of money for down payment. And let's lessen the credit requirements a little bit from what these conventional loans are. So that's really how FHA came about. Today, they still serve that demographic.
Hmm.
You don't have to be a first-time buyer. You don't have to have perfect credit. We even do FHA loans down to a 550 credit score.
Oh, wow.
So 3.5% down payment.
Mhm.
These are good loans. We do a lot of those FHA loans every single year. They're a great product to help people get into the housing market that otherwise wouldn't be able to.
Right.
So that's a good option. I'm going to throw this out there really without getting into the weeds a whole lot. And this is going to pique a lot of people's curiosity when I say this. FHA also offers a renovation or rehab loan, and it's called
Mhm.
the FHA 203K.
Mhm.
I'm not going to get into that because we could talk for days on the 203K loan. I will say that, again, there's a lot to that program, but that is something that's out there for buyers who see a house that does need some work and they want to buy that home and make it new again. So those are the two options under the FHA umbrella.
Okay.
Now we have VA. Oh, did you have questions about those before we
No,
move on?
I wanted to shift you to VA before conventional.
Okay. All right. Well, then we're on the same mind wave today. That's good. So VA is a loan type that's administered by the Department of Veterans Affairs. And the VA loan is specifically for veterans. Now, there's
And
a
their
little,
partners.
yes, and there's a little caveat to that because if a veteran who, if a veteran passed away while serving on active duty, their spouse can use their veteran benefit and be able to purchase a home under the veterans VA benefit or
Mm-hmm.
entitlement as they call it. So the really awesome thing about VA loans is that they allow veterans to be able to buy a home with no down payment,
Mm-hmm.
zero. Now, they don't have to be first time buyers. They can use this veterans, their entitlement multiple times. There are some conditions upon that. Again, we can get into the weeds on all of these programs as in different videos. But the in my opinion, the VA loan is the best benefit that we offer to those who have served our country. And, it's an amazing program. Again, it's another program we do a lot of. And I really wish that more veterans would take advantage of the program. I think, and I hate to say this because I don't mean anything negative by it, but I don't think that the government does a great job reminding veterans that they have this benefit. And so on that line, it's up to you, Shay, and to me to remind veterans that they have this entitlement or this benefit to be able to purchase a home with no money down. So those are a great program, and I would encourage anyone who served in the military to ask their loan officer about that, and they can determine for themselves if they would qualify for a VA loan. And we'll get into that
Yeah, when we
when
get
we
into
really dig into VA loans.
yeah.
All right. The next one I'm going to talk about USDA.
Okay.
All right.
About them.
So this is one that raises a lot of eyebrows because USDA stands for the United States Department of Agriculture.
Mm-hmm.
Wait a minute, we're talking about mortgages. What do mortgages and agriculture have to do with each
Yeah.
other?
USDA sounds like farming.
It does, and it is primarily. However, the government years ago noticed that as far as loan options that are available to people who want to buy in rural areas, those options were very limited back in the day. And there's I, I travel a good bit, and I travel to a lot of rural areas. Shay, I like to hunt and fish, and that involves me being out in the country. So I travel to a lot of rural areas.
Mhm.
And what I see in those rural areas, these small towns, is there's a lot of small banks that do a wonderful job serving their community. But what I also know about those small banks, because I'm in that same world of financing, and I happen to know that most of those small banks don't offer 30-year fixed rate mortgages. And so because of that, that leaves a huge gap for people wanting to buy a home in rural areas to get some secure long-term financing. So that's where USDA stepped in. And the USDA program also will allow a buyer to buy with no down payment.
Mhm.
That's huge. They'll, and here's one of the stipulations of the USDA loan. There are only certain areas that qualify for a USDA loan. And so there's USDA has a website where you could go in and enter an address and it will tell you if that property qualifies or not. But again, remember I said it's for properties in rural areas. So
Right.
if you're thinking you want to buy a house with no money down in, oh, Hoover or Gardendale or, in the downtown Trussville area, the chances of that property qualifying for a USDA loan are not real good. So again, there's a website where you can go and punch in the address and it'll search and tell you whether or not that property is in an eligible area. Also, USDA has income limits for the household. So someone's income cannot exceed a certain amount in order to qualify for a USDA loan. But again, we could do 30-year fixed rate loans on a rural property with 100% financing for people who meet the USDA guidelines and the property fits within USDA's market. So another great option. Now, I'm going to stop right there for half a second and I'm going to say those three loan programs are what we in the mortgage industry call government loans because they are really administered by different government entities or organizations. So we classify those as government loans. All of those government loans have their own unique set of guidelines and qualifications that are vastly different from the next group of loans that we're going to talk about, which are conventional loans. And so conventional loans are, I would say, the most, well, this is not a, this is fact, is probably the best way to say it. They are the most popular loan type. So why is that? Well, there are no stipulations as to you having to have served in the military. You have to buy in a rural area to get a conventional loan. Your income cannot exceed a certain amount to get a conventional loan. There are none of those types of qualifications. So conventional loans do, I would say, they're available for a much broader market. But again, there's still credit requirements, credit restrictions on those, no income restrictions at all. And they are the most popular loan type. We can do conventional loans down to 620 credit scores. Somebody can even purchase a home on a conventional loan with a 3% down payment. One thing I haven't touched on because I'm trying to stay at that 30,000 foot level and keep this as brief as possible is most of these loan programs, VA, FHA, conventional, will allow the buyer to qualify for certain down payment assistance programs as well.
Yeah.
So even though a conventional loan says, hey, your minimum down payment is 3%, well, there's probably some sort of down payment assistance that would be available to that buyer to where they could probably buy a home for no money down.
Mm-hmm.
Same thing, FHA. I already mentioned that VA allows for no down payment, but what down payment assistance can help a VA buyer with is covering closing cost. So here there are all of these options, and I'm going to touch on two more. So again, conventional loans going to be the most popular. The next loan type that I want to talk about is a jumbo loan. So a jumbo loan, if you think about it, why is it called a jumbo loan? Well, because it's for a larger loan amount. These are bigger dollar amount loans. Most of the areas in the country have the same limit, but you think about places like New York, Hawaii, California, who have very high real estate prices, their jumbo loan limits are higher than what that jumbo loan limit is in Alabama. And right now in Alabama, gosh, Shay, I've given up on trying to remember the number because it changes every year, but it's up there high. I mean, we're talking in the 650s. So for that loan amount, and hopefully you're looking it up for me because I can't remember the number off the top of my head today. But again, I've pretty much given up trying to remember it because it'll be different in 3 months anyway.
Mm-hmm.
So that jumbo loan has, again, different qualifications. We can do those with a 5% down payment. They've got different credit score requirements, just different qualifications all the way around. But a very good option for people who want to purchase a higher sales price property and come in with a low down payment. I mean, you're talking a 5% down payment. Then lastly, we have what we call non-QM loans. What does that mean? Well, that stands for non-qualified mortgage. I'm not going to dig into the weeds, but those non-QM loans involve about 4 or 5 different loan types.
Mm-hmm.
I will say the most popular of the non-QM loans are what we call DSCR loans, which are debt service coverage ratio loans, DSCR. And the DSCR loans are intended for people to purchase investment properties. What makes these loans unique is that we can use the rent for the property that buyer is purchasing to qualify that buyer for the mortgage. So we don't need pay stubs. We don't need tax returns. We don't need W-2s in order to qualify that buyer. We can do those with as little as a 15% down payment. And there's one little negative to those besides the higher down payment, and that is that they're going to have a higher interest rate. But if you consider the fact that the property is qualifying the buyer for the mortgage, having that higher interest rate is really a great trade-off.
Mm-hmm.
Okay, so those are great loan programs. The other big the big non-QM loan that we do is a bank statement loan. And with bank statement loans, the buyer has to be self-employed, and the buyer has to be self-employed for at least 2 years. Now, what's unique about the bank statement loans is we use just bank statements to qualify the buyer for that loan instead of using tax returns and W-2s and pay stubs. We use just bank statements, and we look at either 12 or 24 months worth of bank statements, and that can be personal or business bank statements. And we're going to look at the deposits going into those accounts, and we're going to take a percentage of the deposits going into those accounts and use that as qualifying income for the buyer. So again, it's something that's very unique, very niche that not every buyer is going to qualify for. Those programs do require a little bit larger down payment. Our minimum down payment on those is 10%. They do have a little bit higher credit score requirement. I'm going to say we're probably in that 660 range on a credit score for a bank statement loan. But the real benefit of the bank statement loans is that they, for self-employed buyers, they take a lot of deductions from their
Mhm.
income on their tax returns that are legitimate deductions that they're allowed to take. But that doesn't necessarily mean that those deductions are true expenses that are offsetting or declining their income. And so with these bank statement programs, we don't look at the tax returns to see what kind of deductions that buyer is taking. We use just the bank statements and the deposits on those bank statements. So it's a great program for self-employed buyers. I would say what we typically try to do here at Gagliano Mortgage is when we get someone who applies who's self-employed, we go the route of looking to see if they'll qualify for a conventional loan or an FHA loan first, or even
Mhm.
VA, or even USDA first. And if they don't, because their tax returns don't show enough income, then we'll look at bank statements as a plan B for that
Right.
self-employed buyer. Whereas a lot of self-employed buyers try to go to their bank to get financing, and their bank doesn't offer this type of program. So the bank's just going to say, sorry, can't help you. You don't show enough income. Goodbye. But we have a plan B for those self-employed buyers, and we help out a lot of them with these bank statement loans. So those are the two big non-QM programs. There are several more underneath that umbrella, and we can dig into some of those in another topic or in another video. But all right, I've talked for a long time and gone through a lot of stuff, and you've been taking some notes along the way. What do you have for me question wise?
Um, okay, I wanted to point that we talked about that there's a limit on all the loans or most of the loans. I did want to point that there is no limit on VA,
That's
right?
correct. That is
So
correct.
we don't have to do jumbo on VA.
That's correct.
Okay, I
Yep.
want to point that.
And
Um,
that's a big deal. I mean, you think about being
yeah,
able to, for a veteran to be able to borrow $2 million on 100% financing,
right.
big deal.
Also wanted to touch on USDA that the income is household. I know you said that, but I wanted to make sure we took a pause.
Yes. Yeah. And that's worth diving into a little bit very quickly. So,
Okay.
what Shay's talking about when she says household, most of us think, okay, well, I work and my spouse works. So, our household income is blank.
Mhm.
But if you have a teenager who's working part time, that teenager is earning income. USDA considers that to be part of your household income. For those of us who have aging parents and have moved aging parents in with us, and those parents are receiving maybe a pension and or social security, well, that's part of our household income. So USDA can be kind of restrictive when it comes to qualifying for their loans and meeting their income restrictions. And so that's something that, and by the way, and Shay, you already know this, they are very strict on the income, very strict on the income. So that's something that we have to consider when we go to qualify a USDA buyer.
Right. Alternatively, I do have a question though. Alternatively, if you have a couple, one of them has an income, the other took a loss on their taxes. How does that affect the income for USDA? Does that loss go against the total household income?
Yes. Yeah, it does. And so, but still that does go against qualifying income
Right.
for, determining whether that buyer can meet the payments.
Right.
But yes, it will help to offset that income.
Okay. Da, 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 da. Oh, I wanted to kind of do my little wrap up. So FHA 3.5, as low as 580. VA 0% as low as. Is there a credit requirement for VA?
Okay. So
I know that's a very loose um
it,
topic.
it is. So for us, we actually can do FHA down to a 550 credit score,
Okay.
which is
Oh.
different than a lot of mortgage companies around. They set their limit at 580. So here's the tricky thing with both FHA and VA loans. Neither HUD, remember HUD
Hmm?
is over FHA loans, or nor the Department of Veterans Affairs set a minimum credit score.
Mm-hmm.
So they leave it up to each lender to set that minimum credit score. And for us, we're 550 for VA and 550 for FHA.
I think that's really good for people to know that the credit score limits are set by the lender.
Yes, yes, that's a big deal. And,
Yeah.
you know, a lot of people, and I get it, a lot of people, uh, they go and they apply with their bank because that's who they're familiar with. And it's going to sound like I'm really picking on banks today, but I'm not at all. But banks have their own programs to offer and with their own guidelines and their own restrictions, and they don't have any choices beyond those options.
Right.
So if a bank has a minimum credit score of 580 on FHA or VA, and someone has a 579 credit score, well, guess what? The bank's going to tell them, I'm sorry, you don't qualify. And so that buyer leaves the bank or hangs up the telephone from talking to that banker and says, well, I can't buy right now.
Mm-hmm.
So it's important to check around because of that. We can go down to a 550. There may be a lender out there that would go lower than 550. I don't know. That's if there is, we don't offer those that as an option because I don't know who it is. Otherwise, I'd probably get set up with them so we could go even lower than 550. But and here's the other thing too. This is something that I've learned after being in the mortgage business for 30, almost 31, yeah, almost 31 years. I'm having to stop and count months in my head.
My entire life.
See, I was going to say you were 25. Either way, that would be your entire life. So here's the thing with oh, I forgot where I was going now. Shay, you got me sidetracked
I'm
just
sorry.
bragging about how young you are. Um, so, all right, we were talking about credit scores and we were talking about the VA and USDA loans. So, oh, here's what I was going to say. Here's where I was going with this. There are a lot of lenders that say, well, we will go down to a 520 or a 540 credit score. And they'll offer you something with a very low credit score and say that they'll do loans at that. And the truth of the matter is, they may say they offer that, but they don't actually close those loans because they have such tight restrictions on maybe other parts of the loan. Where when I say we do loans down to a 550 credit score, we do loans down to a 550 credit score and we do them very well. We offer those to a broad group of borrowers. And I think it's important to say that because not all lenders are created equal. Some of them say they do mortgages, and some of them really do mortgages.
Better
And
talk your talk, Andy.
well, here's the thing. I learned this the hard way, and I learned it after the crash in 2008. because uh, just because a company says we do mortgages doesn't mean that they're friendly to all types of borrowers.
Hmm.
And so what I have done, I've made this a focus for my company, and I'm going to tell you why I've done this. But I've made it a focus for my company to only do business with lenders who want to do business, who need to do business, who know their purpose in this market is to serve the customer. And here's why. Selfishly, if I work with lenders who make it easy for buyers to buy and for owners to refinance, and they make it easy on the customer, then guess who else it's easy for?
Yeah.
Me. So why do I want to jump through a million hoops and then at the last minute tell a buyer, oh, I'm sorry, you don't qualify? It doesn't do the buyer any good. It doesn't do me any good. But you know who's still getting a paycheck on Friday? The person who works for that bank, that lender who at the last minute said, I'm sorry, we can't help you. So it's just a different mentality, and that customer service mentality, it goes through every industry
Mhm.
and especially in the mortgage industry, that is an important piece of the puzzle. So anyway, I'm going to step off of my soapbox because I'm, in case you can't tell, I feel very strongly about that.
Oh, I can tell.
And it's a big, big, big deal. It really is. So, all right, I am stepping off that box. What's next?
Oh. USDA. Did we talk USDA
We did?
credit? Did we talk credit?
No, we didn't.
I
So
know we talked that there is a credit requirement, but I don't think we mentioned what it was.
yeah, so USDA is going to be 550
Okay.
is
Fine.
is our limit on that. A lot of lenders will tell you there's again it's 580. That 580 credit score limit seems to be the norm throughout the mortgage industry.
Yes.
Again, it's not that way from lender A to lender Z. Somewhere in between there's a lender who's going to tell you they'll do one down to a 500 or a 520 or whatever, but again, I don't know who it is, and I if they even if they say they will do it, we don't know that they will do it.
Right.
They can say they can do it all day long.
Conventional 620
Correct.
and as low as 3% down.
Yes.
And then jumbo,
All
we
right.
didn't talk about credit or down payment for jumbo.
Yes. So 10% down on a I'm sorry, 5% down on a jumbo,
Okay.
and credit score is going to be a minimum of 620 on that.
Okay. So more in line with the conventional.
Yeah, those jumbo loans the guidelines line up pretty evenly with conventional, other than that loan amount. They'll go much
Right.
higher.
Right. And then bank statement.
Okay. Bank statement, typically we're
Okay.
at a 660
Right.
credit score on those, and minimum down payment on those is going to be 10%.
Right. Oh, there was another thing I wanted to mention. I felt like we needed to slow for. Um, there is no PMI on VA.
That is correct. There is also no PMI on a jumbo loan.
Oh,
Yeah.
I knew that.
Yeah. And so a lot of times, if we have somebody who, let's say they're buying an $800,000 house and they want to put down just enough money to where well, I may have gone too high. Let's say they're buying
Oh,
a $750,000 house
okay.
and they want to put down just enough money to where they can go with a conventional loan over a jumbo loan,
Mhm.
because conventional loans are going to have just a slightly better interest rate, a slightly lower interest rate than a jumbo loan is. I'm talking an eighth to a quarter of a percent lower rate, nothing huge. but still, that buyer wants to put down just enough money to where they're getting a conventional loan and not a jumbo loan. That conventional loan has PMI on it. That jumbo loan does not. So a lot of times it makes more sense to go with that jumbo loan in those circumstances than it does with that higher rate than it does with a conventional loan with the lower rate and PMI.
Yeah.
So, but yes, I'm going to go back to VA. I, I mean, I love VA loans. I really do because they are amazing. No PMI. VA does have what they call a funding fee.
Mhm. Oh
That's
yeah.
that's upfront, so it's paid at closing. If a veteran receives any disability
Mhm.
income, then that funding fee typically is waived for that buyer. But that funding fee is a way for the Department of Veterans Affairs to fund this VA loan program so that they can keep it going in the future. They do an amazing job. And I will tell you, historically, year over year over year, VA loans have the lowest default rate, meaning people who don't make their payments and the lender has to take the home back. Out of all of those loan types that we've talked about, VA has the lowest default rate. And the reason is that just the way that they qualify their buyers, even though it's 100% financing, most lenders would say, well, that's a risky loan. But because of the way they qualify their buyers, they're these loans are they perform excellent. They really do. They're a great loan program. So that VA funding fee is a big deal.
I have two questions on that while we're on that topic.
Okay.
Um, you said VA funding fee is paid up front. Can it also be rolled into the loan?
Yes. So here's here's the thing. So technically it is paid up front at
Right,
closing.
right,
Most veterans will finance that funding fee with the loan.
right.
So to give you to give someone an example, if if they're buying a home that's $200,000 and the VA funding fee is 3.5%, let's say they're a repeat buyer for VA, that would be a $7,000 funding fee. If they're going to put no money down, they're buying the house for 200,000, they're getting a $200,000 loan plus that $7,000 fee. So they'd be getting a loan for 207.
Okay.
Yes, that does make their payment higher because they're financing 207 instead of 200,000, but it's still much cheaper than having PMI added to their monthly payment. So a great option. Now, one other thing, remember I mentioned the down payment assistance
Mhm.
being available
Oh,
for
yeah.
VA buyers.
Yeah.
What if that veteran got down payment assistance and got the seller to pay some of their closing cost for them
Hmm.
and did 100% financing? They can then either pay cash for their funding fee through the down payment assistance program or let the seller pay their funding fee for them. They're getting 100% financing, and then they can use some of that down payment assistance money or some of that the seller concessions to cover their closing cost and literally can buy the house with no money out of pocket.
Yeah.
And,
Nice.
that's a great option. So,
That's really nice.
yeah, there, you know, I think this is a great video because it's probably confusing enough for a lot of buyers to say, well, where do I start?
Yeah.
And you start with having a conversation. And really these initial conversations that we have with buyers are they're an education lesson and they're also discovery. You know, I want to discover what are your options. Then
Mhm.
let's figure out which option's best. Is it VA that's best and then FHA and then conventional, or is it conventional and then FHA is best? You know, what are these options that are available to you? And let's talk about those options and why option A is better than option B. And ultimately, it's the buyer's decision. You know, I tell all of our prospects this. I may give you two or three loan options, but this is your loan. This is not my loan. And even though I love you, I'm not going to make your mortgage payment for you. So you've got to be comfortable with the mortgage that you're getting. And it's just extremely important for buyers to know what those options are and to really look at it and weigh which of these mortgage options is going to suit the buyer's financial goals.
Mhm.
And that is one thing that I try to stress. You know, yes, a mortgage is a debt, but people's debts need to be factored into their financial plan. And those financial plans, you know, a mortgage is a tool to achieve wealth. I mean, that's it sounds crazy. I'm taking on debt to achieve wealth, but truly that's what's happening. And so it's important for a buyer to know all their options and be able to make an informed decision about what is the best plan for themselves and their family going forward in the future, and to look at it with tomorrow in mind. And I mean literally tomorrow in mind, but also look at it with 10 years down the road in mind, 20 years down the road in mind, and decide which of these options are going to work best for the buyer. So,
Yeah.
yeah, but it all starts with a conversation, and there's no pressure. You know, sometimes we have these initial conversations with buyers and it's all very overwhelming for the buyer. And it's okay for that buyer to take a step back at that point and say, you know what? I just, I just need, I'll be more comfortable if I wait 3 months or 6 months or 12 months and I accumulate a little bit more money in savings.
Right.
Or if I work on my credit to get my credit up from a 570 credit score. And remember, they would still qualify for a loan at 570, but I want to get my credit score up from a 570 to a 600 or a 620 or a 650 so that I can get a better interest rate at that point. You know, so that's why having these conversations are so crucial. And just knowing that that's going to happen in a manner that's not going to be pressure filled to do something today versus tomorrow, and is not going to be, these conversations are not going to be had in any sort of a judgmental way at all.
Yeah.
I don't care how bad somebody's credit is when they come to me. It is not the worst credit I have ever seen. I will promise you. So there's no judgment here. We all go through things in life and we have to deal with those things when they arise. And so many of those things are beyond our control. But that doesn't mean that you can't qualify to buy something in 3 months or 6 months if you'll do a little bit of work on your credit to get it higher. So, anyway, again, those are things I can talk about for days, but
Yeah.
it's
I've
important.
I've been taking them like, okay, we need to do a video on this. We need to
Yeah.
do a video on this.
Yeah. And, you know, Shay, you've known me for a while. You know how passionate I am about the industry, but and I know you're the same way. And this is why you and I work so well together and why we take such great care of our clients together. I'm passionate about my clients, and I know you are too. And so I don't ever want someone to get into a transaction, buy something today, and realize a month later they made a mistake. because
Yeah.
they can't make the payment, or they've used all their money that they had in savings and their car breaks down, or God forbid they lose their job and there's no prospect for making that mortgage payment next month. So we want what's best for our clients, and I think that sets us apart.
Yeah. One of the first things I always tell my clients when they get that pre-approval is, we break it down to the monthly payment. And I'll tell them, like, look, just because Andy said you can afford this, you know what you can afford. If that payment is too high for you, we're not going to be looking anywhere near this.
Oh, yep,
And you have to take, we talk about them taking into account the rest of their bills and the rest of their debts and everything that they have to take care of. And if just because Andy said you can do it, I mean, we need to be doing it,
yeah,
you know? So, and that's just one way of trying to get them into thinking about the whole picture
yeah,
and knowing that no, I'm not trying to just sell you the most expensive house that I can get you in. I'm not trying to do that. I'm trying to sell you the house that's going to be right for you and your family and your
yeah,
financial situation.
yeah. And doing that, knowing that, hey, that may put you in a house that's this big today, but that doesn't mean in 5 years you can't buy a house that's
Right.
this big.
Right.
So, that's the thing. And I think a lot of buyers look at this like their parents or grandparents and say, well, my grandparents bought a house and they lived in it, that their first house, and that's the house they died in,
Right.
or that's the house that they moved from into a retirement home or assisted living or whatever. And it doesn't have to be that way.
Right.
You know, so many people today, even if they don't get transferred with their jobs, are buying a starter home and they're staying in that home for 2 years, 5 years. They start having kids and their needs expand. So buying a home, that home needs to expand with those needs. And so don't again, it needs to be part of the plan.
Right.
And what is that plan? Where do you see yourself 30 years, 40 years, if you're in your 20s, 50 years from now? And let's look at it and let's take the first step, because that's all we need to look at is the first step. And then we can start after you take that step, then we can look at the next step. Is that upgrading to buy a bigger home, or is that remodeling and doing an addition onto that home, that starter home that you bought? Do you love everything about it, but you just need more space? So again, those are things that all need to be made part of that plan. So yeah, it really is a big deal. And there are a lot of people in the real estate industry and a lot of people in the mortgage industry that make purchasing a home a transaction.
Mm-hmm.
And you and I make it about a relationship. I don't want to do one mortgage for you. Shay doesn't want to sell you one home. We want to establish a relationship with you to continue to help you as your family grows and your needs grow, or as your family shrinks and your needs shrink. So we're we're here for the long haul, and you know there there's a lot of good mortgage people out there. There's a lot of good real estate agents out there.
Oh yeah.
But what I do know is that there's two people in this video here that really care about their clients. So that's a big difference in I would say satisfaction for buyers.
Yeah.
So
In the spirit of that, Andy, the actual first step would be to get in contact with you. How would they do that?
okay. So you can reach me at 205-979-4412. I'm at extension 1. And our hours are 8:30 to 5, but Shay knows that that 5 o'clock thing is, I'll just say it's a lie. That
It's a little
it's
shaky.
Yeah, it's usually much later than that. So for those who have a hard time talking during the day, If they
Yeah.
need to have a conversation after hours, I'm more than happy to do that as well. So, how about you, Shay?
I can be reached at 205-567-9713. No
Awesome.
extension.
No extension. That goes right to her. That's the Shay hotline.
Thank you so much, Andy. I actually really can't wait to do these breakdown videos of the different loan types. And I think we're gonna start with the VA loan.
I like it.
We'll start
Like I
on a
said,
high note with your
uh,
favorite.
yeah, I'm just a huge fan of it, and so we'll do that. That'll be fun.
Yeah, I'm very excited about that.
Awesome.
All right, thank you, Andy.
Thank you, Shay. You have a great week.
You too.
Talk soon.
All right, bye.
Bye.